Hello, this video deals with the Chaikin Accumulation Distribution Indicator. So you'll find a detailed description of the indicator, its calculation formula and its trading signals. You will also learn trading strategies and patterns generated by the AD lines and have a look at some other similar indicators. We shall also analyze accumulation distribution pros and cons, assess the profitability of trading with the AD indicator and give some tips on how to use the tool in FX trading with maximum profit. So this will be most likely divided into 2 or maybe 3 parts, so be sure to follow for the next one. So let's start. What is accumulation and distribution? Well, the accumulation is a situation when market participants buy assets, counting on the asset's price growth. First, there is an accumulation of positions and then the price rises. It is on this principle that the accumulation distribution indicator is based. Conversely, when the bull market reaches its maximum, the sale of assets begins, that is, their distribution among market participants. So then the price goes down, and as soon as the distribution ends, the market returns to the initial cycle, which is accumulation. So these two stages repeat, alternating each other. So in the Forex market, the indicator works a little differently since a currency pair contains 2 currencies. And so the AD line declines when sellers dominate the market and rises when buyers gain control. So the theory of the AD indicator is a volume-based indicator. It suggests the volume is more important than the price. Without trading volume, the price would stand still. And so to move the price, the asset must be bought, which is the accumulation, or sold, which is the distribution, which means a high volume is required. So what instruments and market does the indicator work in? Well, Chaikin's accumulation distribution indicator works in any market and can be employed in trading CFDs, stocks, commodities, currencies, or cryptocurrencies even. The best time frame for analysis is daily, which is a D1, and the indicator can be also used on hourly H1, 4-hourly H4, and weekly timeframes, weekly, which is W1. So using timeframes shorter than H1 makes no sense, as the market noise will generate, as always, a lot of false signals. And it is possible to switch to periods longer than weekly in the case of long-term investment, because the position holding period will be measured in years. So, accumulation distribution indicator exterior by default. The instrument is located at the trading instrument chart. There is only one colored line in the accumulation distribution indicator window, the color of which can be adjusted in the settings. It is called the AD line. The accumulation distribution line is expressed in quantitative terms. It can be positive or negative depending on the trend direction and the period's volume accumulated by buyers or sellers. And the situation when the line of the AD indicator is growing characterizes a bullish trend, and when the line goes down, the trend of course is bearish. So let's dive deeper. What is the accumulation and the distribution line? So the AD line is a mathematical indicator of the market state based on the trading volume. It helps to confirm or refute the strength of the current trend. So the accumulation distribution line performs 2 tasks, confirming or refuting the ongoing trend. If the indicator line goes in the same direction as the price movement, the trend is confirmed. In this case, you can enter trades in the trend. If the price chart moves in one direction and the indicator line stands still or moves in the opposite direction, a divergence occurs. That is, the trend is not confirmed. In this case, you should be careful and prepare for possible price reversals. So, let's talk briefly about the formula. As mentioned, the accumulation distribution oscillator analyzes whether an asset is accumulating or distributing at the moment. So to do this, the tool estimates the cash flow that enters or exits the asset. To understand whether funds are flowing into an asset, the indicator analyzes the trading volume and trading range. So you do not have to memorize the indicator formula. Modern trading platforms will automatically carry out the necessary calculations. However, in order to understand how the AD indicator works, it is useful to know the accumulation distribution formula and what components it consists of. So the AD calculation consists of 3 steps. The closing position value acts as a parameter between 1 and -1, which is multiplied by the current trading volume. So what does the AD indicator measure? Well, it measures the money flow volume for the current period. For example, one trading day, and compares it with the cumulative flow for the previous period. In other words, the tool marks the inflow and outflow of money. The value is displayed in digital form and takes into account past performance. And based on this information, the trader sees how the instrument is currently being traded. And money flow can be characterized in another way. If the volume increases and the price rises, then the market is dominated by bulls. Therefore, the trend is up, and you should of course buy. If the volume increases and the price falls, then the market is dominated by bears. In this case, the trend is down and you should sell. There are also situations when the period's money flow volumes decreases and the price rises. This usually indicates that the buyers are exhausted and that a correction may soon begin. Conversely, if the volume declines and the stock price continues to fall, sellers have probably lost strength. In this case, the market may go into an upward correction in the near future. And so the Chaikin AD indicator measures the balance of power between buyers and sellers in the market. The tool gauges the volume and the time during which this volume has passed. It also measures the result of a trading operations, the price increased or decreased in relation to the middle of the period's range. So we get 9 possible options divided into 3 groups. Let's consider them in more detail and analyze the signals the indicator generates in each situation. So first situation we have when the AD line is rising. So the options probable when the AD line is rising include: when the AD line is rising, the price is rising, then it signals an uptrend supported by new purchases. This is a bullish trading signal. Consider long positions at this time, of course. Next situation is when AD line is rising and the price is falling. Then there is a bullish divergence. So between the price and indicator charts, which often occurs in corrections. The positive divergence means the previous uptrend is likely to continue. Otherwise, the AD line will turn down and the trend will change downward. So then we have the AD line is growing, the price is staying the same. So the trader should be prepared for a continuation of the upward movement, as the indicator signals that purchases are taking place in the market. So when participants accumulate the required volume, a strong price movement will begin. And then we have the scenario when AD is falling. And so the options probable when the AD is falling, then we have the first one: AD line is falling and the price is falling. So then it signals a pronounced downtrend. The price is going down, supported by new sell trades. It is, of course, a bearish signal. Then we have that AD line is falling while the price is rising. That means there is a bearish divergence between the price and indicator charts, which is usually characteristic of a correction. So the negative divergence suggests that after the correction ends, the downtrend is likely to continue. Otherwise, the AD line will reverse and a new uptrend will begin. Then we have the AD line is falling while the price is trading flat. And this signals a likely continuation of the downtrend, as the indicator signals active sales in the market. However, the accumulation distribution indicator is leading and will indicate the appearance of a sell signal. Then we have the situation when the AD line remains still, and the scenarios for that. First one is that when the AD line is stagnant, as is the price. It means there is no clear trend in the market, or liquidity is very low. Most likely, the market is trading flat, and the indicator does not generate any signals. So trading using the accumulation distribution indicator in this case is of course not recommended. Then we have the scenario when the AD line remains still while the price is rising. This signals divergence. So the market is likely to head down in the near future as the price increase is not confirmed by the increase in volumes. The next scenario is that the AD line of course remains still together with the falling price. So this signals convergence. The price decline is not supported by trading volumes, so the price could start an upward movement soon. It is not recommended to enter sell trades. One should be prepared for a price increase rather. So that will be the end of part 1 of this video. Of course, subscribe to the channel to not miss the second one.